recovery that we had in place yesterday. So a smart follow through actually from Friday's price action, managed to eke out gains and almost a good 1% of a recovery from the session lows after what looked like a bit of a wobbly start. So we made it back to that 19,150 odd level. In fact, from the Thursday's lows, that of 18,837 thereabouts to be precise, we've almost seen a good 1.5% recovery. Similar has been the case with the Nifty banks as well. A 2.25% recovery coming in from Thursday's lows. And the small and mid caps have really come back faster. In fact, the Nifty small cap index alone has seen an over 5% recovery coming in. So that really is the picture. Fingers crossed on whether or not we're going to sustain those gains or not. That, of course, remains a big question mark. The only, slight bit of trouble is that you've not got the best handover, at least from Asia this morning. US, of course, managed to close in with solid gains for itself. So, yep, each day as it comes, I guess.
So, Aisha, look, you have to look at the global construct and the local construct. The global construct is that an oversold market was due for a bounce, and I'm referring to US markets here, and you got one bounce. There is BOJ and there is Fed. So, all eyes for global market watchers would be on what the central bankers would do. And would they be acting and reacting to what's happening suddenly to geopolitical concerns, or how would they analyze the US GDP data? So these are factors which are important from a global market standpoint. But I guess Indian markets need to be analyzed independently. While you may make a case that, Indian markets have struggled, or Nifty has struggled at higher levels, which it has, I guess the recovery from Thursday's low, I think, is quite impressive. 3% up for the small cap index, which means, we've seen like a 5% actually. I realized it was 3, it's 5%. Now 5%.
3 for the mid cap index,
yeah,
5 for the small cap index.
That's impressive. I mean, you lost 5%, you recovered 5%, you're still down because 100 becomes, 95, and from 95, if you recover 5%, you obviously have not gone back to levels of 100. But it's impressive. It's very, very impressive. Yeah. That typically means that if you really analyze the price action is synced with what we've been maintaining. That looks like this is a bull market correction, very savage, very sharp. And before we analyze the data, hey, guess what? The recovery started. Yeah. So the breadth of the market has stabilized. Large cap stocks within that, banks I think are leading the way. And you've got churn, which I think is clearly visible. What may happen, Aisha, is that while Nifty may take its time perhaps to go higher, because the earning push is not that strong. But I guess within small and mid cap stocks, there are a lot of companies which are coming out with good set of numbers. I looked at numbers from Blue Star, TVS, just about so many companies, Marico, which have come out with good set of numbers. So what may happen is that Nifty will trade with an upward bias depending on the global cues. Mid and small cap stocks as a category which got fractured. Now based on numbers and valuations, you may see individual outperformance and underperformance. And I go back to that same point. I mean, look at the two sectors, it's obvious. Pharma, it is banks and pharma, or pharma and banks. Those are the two leaders.
Yeah. The only thing is that, there may be a FOMO feeling looking at Thursdays and Fridays and yesterday's price action, because many people were just waiting to see where the fall is going to stall themselves, and they're wondering whether it was a missed opportunity not to buy that decline.
It will happen. I think it will happen. Yeah. Why? Because if globally, things stabilize, if markets, let's say, see the index recovers by another 2-3%, the small and the mid cap index, the FOMO feeling actually would come back. The sense what I am getting when I speak to just about everyone, and you do make calls, when you want to understand market, to some market gurus, old timers, fund managers, they're convinced about one thing, that there is abundant, if there is another phrase for abundant, please help me, but there is abundant, or there's insatiable appetite insatiable appetite to buy into Indian stocks, and abundant liquidity which will be there on the sidelines. So which means the market downside, I think, is very limited. What you don't want to do in this market is that you don't want to chase stocks. What you also don't want to do in the market is that if you have a general long-term horizon, then you to ignore these falls. I'm absolutely sure that when we will analyze the selling of October 2023 in January 2024, it will just appear like a blip. It will not even be worth mentioning.
Yeah, just, to take your point forward, just look at the kind of recovery, for instance, from Thursday's lows that we've seen in some of these stocks, like an Adani Power or a Bank of India, for instance. So the recovery has been evident. Let's just, yes, take stock quickly of the global markets. As Aisha said, no, it was pretty strong when it comes to Wall Street. You had the S&P 500, which actually saw its best performance since late August, but not quite the same when it comes to the Asian screen. For the most part, it is in the red. You've got the Bank of Japan that will conclude its two-day policy meeting later in the day. There will be a raising of inflation forecast. So I think all of that really is weighing down on the Asian markets this morning. And the Nifty implied open as well indicates a pretty soft start at around 19,215 levels. But yes, to take that point forward with respect to the liquidity position, just mapping out the kind of data that we've got over the past few days for the FIIs in the cash market. And there you have it, the sell figures that even amount to about 7,000 crores, for instance, on the 26th of October. And in comparison, let's pull up the DII picture as well. And it's been an all-buy picture, Nikunj.
Aman, I don't think we must read too much into what is happening in terms of the liquidity picture, especially from the FI front, because 2 days ago we got that, last week we got that big fat sell number.
Yeah.
Then I think the data seems to be stabilizing. So frankly, if you ask me, from a positioning standpoint, this data is very important for me, which is that FI holding in the FNO market, the positioning is very short. So what are FIs doing? They're taking a view on India or they're hedging their bets. But their view on India is that, look, markets, when you are hedging this kind of a portfolio and when the positioning is 87% short, 12% long, which means that either you're outright bearish or you're hedging. I don't think nobody's outrightly bearish on India. That is not the reality, which means you're hedging your position. Why do you hedge your positions? You hedge your positions because you expect markets to go down in the short term and you want to protect your long positions. And this is an extreme positioning. So this extreme positioning sometimes favors you, which is that if we come on the right side of the Fed, if global markets stabilize, trust me, FIs would actually be forced to run for cover. We've seen the trend. See short covering. Now, as of now, it's short covering.
Yeah.
It has not become massive short covering. Give this market another 2-3 days, little bit of magic spell coming from the global market, and then what we are talking about as a short covering could actually be a massive short covering rally. It may happen because of the positioning of the market, and that really may be the trigger for the Nifty. But for that to happen, I think the Fed event we have to be on the right side of the Fed event.
So it was interesting to see that, almost 65% of yesterday's recovery was led by blue chip, FI dominated names, the likes of HDFC Bank and Reliance Industries. Reliance, of course, reacting to its numbers, but these two giants were the ones which were cushioning the Nifty at least. But getting more micro then, and we're going to be keeping a close eye on what the monthly sales data for Motown is for the month of October. And while we have kick-started the festive season already, you may want to look out for, whether or not there is a return of the entry-level customers when it comes to two-wheelers. For passenger vehicles, of course, besides, of course, the inventory that they have on some of the older models, as indicated by Maruti for the past 2 months, whether or not there are higher entry-level discounts which are being doled out in the festive season. For CVs, that's commercial vehicles, unfortunately, it may not be as robust a month because there could be a month-on-month decline. Remember, the previous month had a very strong base, so it may not really match up to that previous month's performance. And for tractors, we're expecting muted sales amid this festive season. And given as to how strong the contribution, Nikunj, for autos has been and how just about everyone on the street is excited that, autos is a story which is here to stay. It's going to be interesting to look out for what the month-on-month trends are.
See, it's a tricky month to call. I'll tell you why. Because you had, in the month of October, you had first Shraddh and you had Navratri. So first you got 15 days of lull and then 15 days of festivity. So it would be a tricky month to call. Now, tricky month to call, but in terms of a trend, it will be an indicator of which way the Diwali would move. So from a market standpoint, what are markets watching out for? Look, tractors, we pretty much know the trend. CV, we pretty much know the trend. That 15 to 18% jump is here to stay. Passenger vehicle is the tricky one to call because that's where I think the shift in SUV is very strong. But Maruti has also been, indicating that they've had a record Dussehra and, are we in for a surprise there? But the one which markets would really be watching out for in terms of an understanding, if you frankly ask me, would be two-wheelers, and especially for entry level. Is the Indian rural customer or customer back? because this is a typical time when new bikes are being sold, new bikes are being exchanged. There's a strong replacement cycle which always happens in the two-wheeler market in and around Diwali and Dussehra. Because if the entry-level two-wheeler bike does not make a comeback now, then you can kiss goodbye to the recovery for next 6 months. Because it is like now, see, if you want to buy, you would say, okay, Diwali hai, Dussehra, let me buy a bike. And that's typically how the pattern moves. So if you don't get a recovery there, so I think that in a sense will have an impact on at least the stock price of Hero MotoCorp and the stock price of Bajaj Auto in the near term.
Yep, that is going to be closely watched out for, and I guess it will be a bit of a telling sign as to which way we could see the overall festive season pan out for the auto sector. Moving right on.